Hello and welcome to another episode of Test, Optimize, and Scale. Excited to have Etan Butler here with us today, one of the top names, top thought leaders in equity crowdfunding, chairman of the Dalmore Group. Etan, thanks for joining us.
My pleasure, Jason. Always great to be hanging with you, brother.
Absolutely. And wanted to start with you, your story, everything you did pre-equity crowdfunding. Was hoping we could get a little bit of your background before diving into Reg A Plus conversations.
Sure. So I grew up in Silver Spring, Maryland. I went to Yeshiva University in New York for college. And unlike many folks that I work with and many folks at Dalmore, I never really ever had a job other than mowing lawns and shoveling snow when I was younger. I kind of went into day trading after college. Was when day trading became a thing. I had friends of mine who were making thousands of dollars a day trading Yahoo and eBay and Amazon at the time. And I said, "Hey, Dad, I want to do that. I want to sit in a dark room in front of a computer and play a game and figure it out." He said, "You sure? Yeah, I'm not sure it's the best thing for you." I said, "Yeah, I want to really give it a try." So he loaned me $25,000 at the time. Which was leveraged 10x for intraday trading. And of course, I kind of lost it pretty quickly. I was a terrible trader, very impulsive and not very technical. And I realized that I enjoyed the environment, but I kind of wanted to be on the other side of it. I wanted to be more on the brokerage side. So we ended up partnering with the broker dealer and kind of got into automated trading and proprietary trading and raising capital for hedge funds. And then we opened up Dalmore in 2005, got into investment banking, and really spent the first 10 years or so focused on providing institutional investment banking and corporate advisory services for private and public companies in multiple industries. And we're still quite active on the institutional side. And then, things kind of progressed and kind of here we are today.
There you go. I like it. And at what point were you introduced to equity crowdfunding, whether that's Reg D or in conversations leading up to Reg A Plus?
So essentially, it was really around the time of the Jobs Act, 2012, 13.
Okay.
We were amongst the first broker dealers at the time to focus on helping companies raise capital online at scale through some of the Jobs Act born securities exemptions. We started with Regulation D 506C, and really served as the broker dealer of record / underwriter for a number of serial online syndicators of equity and debt, primarily in the real estate space.
Okay.
And that was the entry into kind of serving as a broker dealer for online capital raising activity, and that was a natural progression to focusing on Reg A, right? On the Reg D side, companies could advertise broadly and raise capital from 5% of the population or so, right? The accredited investors. And when we got introduced to Reg A, which was only in late 2018 or so, when it started to really pick up in volume, it really was a natural progression for us at Dalmore, having built the infrastructure and the compliance and the protocols on our Reg D 506C side. It was a really natural progression for us to focus on Reg A, which obviously allows for companies to raise capital online from anyone over 18. So that was kind of how we got into it.
Likewise for us, that natural progression. We were first introduced to Reg D end of 2014, started launching campaigns early 2015. Light bulb had gone off with my partner and I and our team here at the agency, because fundraising was such a common part of the discussion with early stage to mid-market organizations, whether we were working on business plans, the marketing section of it, speaking with investors, running initial marketing campaigns to be scaled with capital. So once we saw this vehicle and I was able to apply ad tech data to go after accredited investors, high net worth, high household income, filtered by different types of investor behavior, saw some success right out of the gate. But at that point, there wasn't quite enough activity in equity crowdfunding. We were awaiting the activation of Reg CF in May of 2016, had advertising running right out of the gate. Again, not too much traction, but we're able to show strong returns for issuers, strong returns for clients. We were then introduced to Reg A Plus for Test the Waters late 2016 and began activating in 2017. And I like how you highlighted 2018. That's where we started seeing a lot more awareness and therefore investments across the entire industry and all three filings.
Yeah, 2019, there was $1 billion raised. 2020, 1.5. 2021, it seems to be trending for significantly more than that. The first Reg A client we had was, I believe, end of 2018 or early 2019. So it's only been a few years, and since that time, we've signed up at this point around 150 Reg A issuer clients, and have been fortunate to be the BD on many of the more successful Reg A offerings to date, meaning the ones that have raised the full maximum amount, not yet 75 million, hopefully soon, but certainly 50. And a number of our clients are now on their second Reg A or who have launched multiple Reg A's. A number of our clients have gone public or listed on NASDAQ after a successful Reg A. So we've kind of found ourselves in the middle of this beautiful industry, and we certainly are having a lot of fun. It's a unique environment, like I say, where regulation meets innovation meets technology. And you always have to be skating towards the puck, and you always have to be learning from what's been working well and not well. As you know, Reg A to a first-time issuer seems to have a lot of moving parts. You need the audit, you need the securities counsel, you need the broker-dealer, you need the technology, the payment processing, the transfer agent, the escrow agent, and then the marketing, of course. And we just try to make the process as streamlined as possible and really bring parties that we've worked with in the past, other providers that are efficient and cost effective, that we've seen perform well, and really try to be a benefit as much as we can to our new clients.
Absolutely. And the fact that you're providing that educational process, being able to plug in existing partners is so valuable. I have to tell the audience, I've seen so many groups get backed up in the Reg A Plus campaign setup, whether it's legal or anything involving the audits. And I know you provide a very streamlined experience for those groups. And also have to emphasize to the audience how impressive it is that you've worked on that volume of Reg A Plus campaigns, have hit the 50 million max. I've seen that it's extended now too, and I know you're pushing those numbers and are at the forefront. We've worked on a good volume of campaigns that have done 5 to 10 million. On these portals, 10 to 20 million is less common, and some get into the 20s. But the fact that you're doing that on issuer sites is truly outstanding. Not just saying that as you're the guest, but just in the sense of where things stand in the industry. So for anyone who's not familiar with it, this means Dalmore is physically involved with the majority of these campaigns, and many of those that have set records. When you're putting together these initiatives, what percentage would you say is institutional? What percentage would you say comes from marketing or from BD activity as a whole?
It's a great question, and I would say that Reg A doesn't have to be as associated with crowdfunding as it is,
okay.
But it has been generally to date. And the reason why is because, again, issuers are choosing to launch a Reg A rather than a Reg D. And a Reg A is more expensive to launch, it's more timely, it's more things you have to do on an ongoing basis. They're launching it primarily so that you could raise capital from anyone over 18, right? And you could generally you'll see much lower investment minimums as a result of that, so that more people could participate, right? And that rings a bit kind of like crowdfunding, right? And as a result of that, many issuers choose to structure their offerings not necessarily in a way that would be so interesting to institutional investors to date, right? You see a lot of common non-voting, or preferred non-voting, et cetera. Whereas institutional investors, typically are looking for, voting participation, perhaps different types of valuation techniques that are used as well. That said, I believe that the industry is moving towards a more sophisticated type of an issuer, especially with the increase to 75 million now, more
Yeah.
issuers are strongly considering looking into and launching a Reg A to raise that 30 to 75 million dollar piece prior to going public or in conjunction with going public, as opposed to knocking on Wall Street doors or approaching VC firms, which extract their own pound of flesh from startups typically, right? So it's a unique way to take your structure, your valuation that you feel comfortable with, and offer that to the masses, and they could take it or not. And it gives more control in that way to the issuer for their own destiny, for their own capital raising future. Certainly, you see companies that are consumer brands, or ones that have significant basis of followers or fans or subscribers or customers. Reg A is a really interesting way for them to convert those fans and followers into actual investors. So if you're fortunate to be a consumer brand, you're also fortunate to be able to kill two birds with one stone, right? You get to market the offering at the same time as you're marketing your brand, right? Which is really unique. And anyone can participate, not just the accredited investor. So everyone's able to be a part of it. So as far as your question, what percentage are institutional? I would say the vast minority are made up of have institutional or significant institutional participation. There are exceptions. We had a cannabis offering that was a record breaker for us as far as time. Gage, as you may know, raised $50 million in under 3 months. Issuers out there, don't expect it, please. I'm giving you an extreme example, but they did, and over half of that came from institutional, investors, family offices, and I think we're going to see a trend of that. That's kind of how it should be, right? It should be the same valuation and the same participation in an offering between sophisticated institutions and the average everyday American investor or international investor per se. And I think it gives confidence. It gives me confidence when I see institutional due diligence on a Reg A and participation in that way, perhaps to investors who see that there's other folks and other bigger institutions that were participating in the same structure. So I think it's moving in that direction for sure. And we're going to see more institutional participation going forward.
Absolutely. And I like how you pointed out the differentiation of the groups that are approaching Reg A Plus, considering it now versus, let's say, 2020. For a $75 million cap, are you seeing more organizations that are $300 million valuations, $500 million, $1 billion valuations? What type of groups you talked about? Consumer focused quite a bit. What type of organizations could we expect in the coming months, the coming years?
We're still seeing certain startups. We're seeing teams that are made up of entrepreneurs that have very unique track records that are launching their next venture. So they're still considered startups from that perspective. And you're seeing, much, lower valuations as a result of that, right? You're also seeing more established companies that are, right pre-IPO or planning on going public, right? And they need to increase their capitalization and they need to increase their shareholder base.
Yeah.
And they're utilizing Reg A for that purpose. And they may be cash flowing companies, they may be more established companies. And as a result of that, you're seeing higher valuations. I wouldn't say we're seeing billion-dollar valuations, but we're certainly seeing certain issuers in the hundreds of millions of valuations, the ones that are out to raise, that $75 million piece.
Sure. Now, what about Reg CF? I know in the past that was too small for broker-dealer BD involvement. Now that the cap's at 5 million, is that something that Dalmore Group is collaborating on, or broker-dealers as a whole?
So prior to March 15th, when the Reg CF max was 1.07 million, we weren't particularly interested in getting involved as a broker-dealer. You don't have SEC qualification at the time. You didn't need audited financials. And for $1 million capital raise, we didn't feel like it was the most productive use of our time. But some of our Reg A issuers were utilizing Reg CF to raise an adequate capital base to launch an effective Reg A offering or Reg D, right? And now that it's $5 million, it got our attention, and we've become a lot more active in it. We're not at the volume of as we are with Reg A, but we're catching up. So it is unique. We work with issuers who are looking to raise that $5 million mark, not with issuers who are looking to raise $1 million or a few $100,000. And our model is, and one of the reasons I think why we became so active in Reg A, and in addition to Reg CF, is our model is very different than a lot of what else is out there. There are a number of marketplace type platforms, like Republic, like Start Engine, like WeFunder, like Seed Invest, amazing platforms. We're very friendly and close with them all, and they're doing an amazing job, and they're super successful. Our model is very different, right? We don't have a marketplace, right? We don't list many issuers together on a platform, and nor do we say that we have 1 million investors, for you to potentially benefit from in that way. Our model is really for issuers who recognize that they're the ones that are ultimately going to be responsible for marketing and promoting their offering. And we help them get there. And we work with folks like yourselves who have a lot of experience in working with issuers to give them that exposure, to measure that return on advertising spend, to come up with marketing strategies to deploy, to understand what's converting well, and then you pour the gas on that versus what's not converting well, and you tap the brakes and you reassess. But it's for the issuer who recognizes that you could list on a platform and you could do quite well, or you might not do so well. You might not get what you had expected. And for those who realize that they're really going to be the ones driving and investing in marketing and promotion, or in converting their own ecosystem of investors, fans, and followers, I think our model is pretty interesting to consider in that way, because we put a Invest Now button directly on the issuer's own website, right? So they become the sole beneficiary of their own marketing and promotional efforts, their own institutional relationships, their own friends and family. Anyone who wants to sees an ad or goes to the site or clicks on Learn More, they're going to be led to just the issuer's page with no other offerings attached to it. So they're kind of like the only game in town. And we try to do so at a fraction of the cost that many of the marketplaces are priced at.
And I like how you pointed out the portals offer great things, but for Reg A Plus campaign, for a group that's preparing to do their own marketing, let's say to produce $50 million in capital, they could be spending 7 figures on marketing potentially. I've seen it done with far less, of course, but just taking in averages, it's a significant marketing budget in comparison to, let's say, a Reg CF. So if they're driving traffic to their offering, they own every piece of the funnel, from the initial traffic that's landing on the page to any type of follow-ups in the content, the retargeting, anything that's occurring. Once an investment takes place, they're the only ones managing that database. Or with a portal, and again, they do great things. And as you mentioned, we have friendly relationships with them as well. An investor participates there, they're going to start getting they're going to start getting marketed to with the next deal. They could start exploring around and seeing other offerings, the top performing issuers on the site that day. It could, if anything, be a longer sales cycle for that participation, for that investment to occur. So a lot of advantages. I know Core Connects, Prime Trust, there's a lot of groups who have this same methodology and have been seeing great results on Reg A Plus campaigns. So glad you pointed that out, because it's such a great avenue for Reg A Plus issuers to explore.
Yeah, and one of the other things, as you know, is that one of the benefits of hosting your offering on your own domain is you have complete control and visibility into the analytics that you need to determine the effectiveness of your various marketing initiatives. You could tag pages, you could track investor activity and movements, you could install heat maps so you could explore where investors are looking on your page and how long they're spending there. And that's really helpful for guys like you, right?
Oh yeah, and we're running into issues, all advertisers are, with the iOS 14.5 changes, which Apple implemented to allow users to opt into tracking, which includes advertising tracking. And if you're running on a portal, there's limitations on placing pixels these days, on what events can be added. So to have that all on your site, to have your pixel, your events, your analytics, if you want to make changes, there's less steps to the process. And I'm a big fan of numbers. The numbers you're talking about, the success that you've seen on your campaign speaks for itself.
Yeah, it's certainly been an interesting journey, and it feels like it's kind of just getting started.
Yeah, it's exciting to think where the industry could be going from here. Seeing growth that occurred last year, and I, along with many people, was unsure what was going to happen in March, April 2020 in terms of the pandemic, investor behavior, digital behavior, and transactions as a whole, and was pleasantly surprised to see the rise in retail investors in that period of time, how they're participating in these deals, how that validated it for more of the traditional VC community. And I've watched more groups, more individuals participate at higher levels as a result. So excited to see what's to come.
Yeah, I mean, we're a lot of people say that crowdfunding as a whole could be looked at almost as a threat to VC investing. I see that perspective. However, I also see how there are very sophisticated VC firms and private equity firms who are launching their own portfolio companies through the Reg A process, right? Because once you figure out, how to raise capital for an offering, you understand return on advertising spend, you understand how to leverage PR and promotion for one offering, you're that much smarter for your next. And so it's interesting that some of our clients now are VC funds, just launching their own Reg As for their own portfolio companies. It's fascinating. We're also seeing a big rise in what we call series issuers, right? So a series issuer is unlike a traditional Reg A issuer who might be raising capital, selling shares in their own, in the actual company, the parent company, or issuing debt from the parent company. A series issuer is launching and really dropping individual assets one after the other, each in its own separate LLC, right? So it's fractional shares in prized assets, and that could be single family homes, that could be racehorses, that could be baseball cards and sports memorabilia, that could be wine and Rolexes, unit and art, and so many of our clients, I think we have about 14 or 15 or 16 now, and many more that are going through qualification, are what we call series issuers. $5 shares, $10 shares. Generally, they'll create their own app, right? Rather than just a website for one specific raise, they'll create an app. They'll build a community of like-minded investors that want to participate and build their own portfolio and choose which assets they want to participate or not. And that feeds really well into secondary market trading, which we've been very active on over the last number of months. Again, primary issuance, so you get the IPO on their app of new releases, and you also have price discovery and secondary market trading, which is a path towards potential liquidity afforded to them through alternative trading systems, which are matching engines for secondary market trading. So we've been very, very active in that space. It happens to be my personal favorite utilization. If I could come back again and do this again, I'd be a series issuer. It's amazing. It's a lot of fun. You source assets and you release them, and people have the opportunity to participate, build their own portfolio, and then potentially buy and sell their shares in the secondary. That's a big thing, and it's limited to the imagination of the issuer. NFTs, assets, everything you could imagine. A lot in real estate. Seeing a lot in real estate, right? So rather than set it up as a fund where investors have diversified exposure to multiple assets or projects, it's set up in a series. So the issuer could say, okay, I could raise up to $75 million a year, right? But I could do it in increments. I could, each single family home, $100,000 home, I could launch 10 a week or whatever it might be, or big or real estate projects. It could be a $5 million specific deal, but it's not connected to the next $5 million deal. That's really powerful.
That was the most simplified and straightforward explanation I've heard of series issuers, NFTs across the board. I'm a big fan of the secondary market, I should say upcoming secondary market, and where it's going to go from there. I believe we need more investor success stories across the board. That's what's really going to drive more widespread, more mainstream adoption. So to be able to have those liquidity events available, and for, in many cases, tangible items, real estate, where these assets are more relatable to more of the general public. It's exciting to see that's where it's going. Is the process to get one of these set up a bit streamlined? Is it a bit quicker, or is it going through the same vehicles that Reg A Plus is currently operating from?
You still have to get the parent company, the issuing entity, through the SEC qualification and the FINRA no objection process in a similar way that you would for a more traditional Reg A.
Sure.
But the release of these individual assets that are in essence drawing down from your maximum $75 million a year is way more efficient. It's not a separate full-on qualification. It's a filing. You have to wait a period of time, but it kind of goes into a bit of a flow once you're qualified as far as releasing additional assets.
Okay. That makes perfect sense. Again, you broke that down in a very clear and understandable way. We're hoping to work on more of those. I'm glad to hear about the type of activity you guys are getting on those. Want to get into a few recommendations in a moment, but wanted to ask one more question. When I hear the term broker dealer, a lot of things come to mind from a traditional standpoint, also from modern, maybe emails to existing groups of investors. What is it that broker dealers do that is so effective for Reg A Plus campaigns?
Well, I guess the first question is, why do you need a broker dealer for a Reg A, right? Okay. The answer is you don't. Reg A is a federal exemption. Issuers are totally allowed to get qualified by the SEC and issue direct without the involvement of a broker dealer. There are a number of states. In the industry, they refer to them as the problem states. They're not really problem states. They're called the problem states, and they include states like Texas and Florida and New Jersey and Arizona and Nevada and others, where it's described as there's somewhat of a disalignment, I guess, between federal regulation and state regulation, which ends up from a state level requiring the involvement of a registered rep or a broker dealer or a certain registration. That could be timely. That could be expensive, and that could be somewhat unpredictable. So if you could work with a cost-effective broker-dealer solution, where on your 1A filing, there's a box check that you're working with a broker-dealer that's registered in all 50 states, that could present a much more streamlined and potentially cost-effective way to do it. There's also a lot of escrow agents and credit card processors that, from what I understand, are not working with certain issuers unless they have a broker-dealer. There's also a benefit of having a broker-dealer because the broker-dealer is performing due diligence, bad actor checks. You have a regulated entity that's overseeing the offering, that's reviewing and approving advertising and promotional materials, that's overseeing the KYC and the AML and the suitability and the OFAC checks and making sure subscription agreements are signed. And in essence, reviewing and approving each individual transaction so that could be approved by compliance, and then the issuer could then transfer those invested funds from their escrow account into their operating account. So there's my opinion, I'm maybe biased, but I think there's a whole, I look at it as a buttoned up way to approach raising capital from accredited and non-accredited investors. But again, when people think of broker dealer, I think they think of 7%, 10% commission. They think of investment banking per se. So if there's a way to avoid that and save money in that way, I don't blame them. But again, the issue comes into, can you sell your securities in all 50 states? Can you accomplish what you want? And I think one of the reasons why we became so active in the space is because of our model and our cost structure. I think makes it really doable and hopefully a no-brainer for issuers who are considering a Reg A.
Absolutely. I think it's a no-brainer. I think no resources should be overlooked. And I've seen groups fall short in the diligence process for KYC, for the know your client, the anti-money laundering aspects. I've seen, the states and having to backtrack stuff at a later time. So to be able to have a group like yourself in there, checking all the boxes, there's a reason why the top groups are working with you on Reg A Plus campaigns. So I could definitely echo that recommendation as well too. And wanted to get into some insights. If there's any founders listening in and they're considering a Reg A Plus campaign, maybe they've started the process themselves, what type of recommendations do you have for them in terms of tactics that they can test out? Whether it's which partners to work with, the positioning of their overall offering and structuring of it, the marketing and distribution. What type of test should they look to embrace for their own campaign?
That's a great question. I would say number one, from my perspective, most important is to have the right team in place. You need to have a strong and stable ship for the journey. And that includes obviously, the right BD, the right that has experience, the right securities firm that's navigated through the 1A process with the SEC, that has some experience in understanding what the SEC is looking for, and maybe considering that as part of the submission, the application, to hopefully reduce the amount of comments that might come back, which could take some time if it's not proper. And I would say, strategy, there's a lot of different strategies, and it really depends on the nature of the issuer and their own strategy. But I would say that first, you want to be able to you want to play to your strengths. You want to leverage your own ecosystem to the extent you have one, right? So if you're fortunate to have all these customers and followers and fans, that's a really unique position to be in. And that puts you in a position perhaps to end up spending a lot less money on marketing and promotion, because you have an audience to go after and an audience to build from, to then pursue, that share similar demographics for your existing audience. Most people don't. Most people end up with, they go through the whole process, they have a landing page, and they're on an island on their own. And how am I going to get investors, right? How am I going to do this, right? So, there's a number of ways to go upon that. One is you could build a kind of a syndication network, right? One of the benefits of Reg A is that you're not limited to only having your Invest Now button and your offering page on your own website. You should do that so that you could direct everyone to that site, but you could also co-list your offering on other platforms. You pay a higher fee, but it's a success fee, right? So you're not limited to listing the Reg A on other platforms. The other thing is there's a big financial newsletter and publication community that's out there. That's evolving and that's growing. So to the extent that your offering resonates to any of these publications and you're fortunate to be covered by them, you're then shown to their own membership base of generally of paying subscribers that are looking for vetted opportunities. And we've seen a lot of success in those areas. And there's more coming to market as well. More publications that have in the past only focused on listed issuers, listed securities, are now also dabbling with Reg A. So we're on that. The other is good old-fashioned marketing and promotion, my friend. That's when they call DNA. It is, selecting a investor acquisition specialist that's been doing this, that's failed, that's succeeded, that's learned, that's gotten better, that's gotten the battle wounds. And you leverage all, and you're getting smarter every week, every month. You have to keep innovating. And the idea is you want to bring in if you don't have these resources in-house, which most people don't, you want to hire someone, and it's a consultant type relationship. You're paying them a fair monthly fee, and they're there hopefully at the beginning of your offering, hopefully to give you the confidence to launch. And many rely on that before they make the final decision. They want to talk to marketers. They want to hear what they have to say. But ultimately, it's helpful to have someone structure everything from your offering page to how it looks, to what you're emphasizing about the marketing of your brand, to designing the actual marketing pieces that you're putting out there, to launch different strategies, to oversee and measure those strategies. Test, optimize, scale, brother, huh? I mean, that's what it is. It's you want to see what's converting. You want to ultimately know or learn that for every dollar I'm spending on Facebook or wherever, I'm yielding X dollars in offering proceeds. It sometimes takes a while to get there. We have some issuers who figure it out pretty quick. They're fortunate. They get featured in a publication, or they have a big ecosystem, or they have a great marketing strategy, or they have great PR, or what they're, cannabis has been very successful, things that were COVID related, real estate. But if you're a business to business company, you need to figure out how to get in front of the right demographic of investor that would have an interest and care about what it is you're doing. One of the benefits of a marketing company is they'll remind you that your average investor is not a institution. It's not a family office per se. It could be, but your average, you want to have thousands of investors. These are average, everyday people like me and you that are sitting at home, that might see an ad, that might read an article, and they're going to be led to a landing page, and they have ADD like all the rest of us. And you have a few moments to capture their attention. They need to understand the structure clearly. Don't spend so much time making a complicated structure. simple for everyone to understand, a fair valuation. Don't keep the evaluation appropriate, keep it fair, look at some comps. That's what you want to do. These are your shareholders. You need to respect them. It's a long-term relationship. You're going to be reporting to them, and these are people that work hard, and they're considering putting $500 or $1,000 on their credit card into your offering. Win for them. Treat them right. And so it's the benefit of a marketing company is that they're reminding you of who your target audience is. They're refining the messaging so that, again, they understand the structure. Hopefully what it is you do resonates to them. They care about it and it's meaningful to them. If you're a biotech company, if you're in the cancer space, you might be targeting people that are searching for cancer-related things or show that in their demographic. If you're a cannabis company, the same thing. You want it to be easy to understand, you want it to resonate to people, and you want people to feel like this is a legitimate operation, and if things work out, then this could become a more valuable investment one day, with the understanding that most businesses will fail. The vast majority of businesses will fail. This conversation is not intended to offer or promote or sell any securities whatsoever, or for retail investors. But if they're already listening, the one message is that use only risk capital. Assume you're going to lose, and diversify if you're going to consider being involved. So, but at the same time, investors have the opportunity to participate in something that's meaningful to them, or a brand that they know or they want to support. And that's what Reg A and Reg CF afford.
I want to quote you on at least 10 points that you made there. That was an amazing level of recommendations there, from the team building to everything that happens on the broker-dealer side. Obviously, the marketing piece resonates with me. I've seen groups fail. You talked about how companies fail, whether it's entrepreneurs, whether it's in fundraising, whether it's in marketing. Even more so when it's the combination of fundraising and marketing. The investor recommendations, as I said, more investor success stories, across the board. And by having founders focus on the investor's perspective, from their valuation to making things clear, allowing them to have it easy to understand to the point where they can repeat it to their friends and family after participating, because social sharing is the highest form of marketing in terms of engagement. It's very evident that you work on a high volume of these campaigns and you want to do stuff that works and make recommendations that are going to pan out. And the other side can come back to you in a few weeks, a few months, and talk about how much traction they've had from it, how much it's been driving. I do have to ask though, what do you do, and this is a tougher question, when things are not working? How do you optimize? How do you pivot if the milestones are not being reached? Maybe it's close, but there needs to be that extra momentum to be able to hit the full goal.
So it's another good question, and it happens, right? This is to issuers, right? It's not like you build it and they come. Whether you list on a marketplace platform or you list with us, where you're on your own domain, not every offering is going to work out as you want. Your message needs to resonate to people, and you need to do a good job getting in front of the right people. A very important piece from my own perspective going into considering a Reg A is making sure that you are properly funded, not just to pay the attorneys and pay the broker-dealer, but to hire the right marketing and investor acquisition specialists, and have a budget in place with the understanding that it's not like you just hire someone and they get started day one and the spigot gets turned on. It's testing, it's optimizing, and then it's scaling. Testing is you need a budget for, right? You need to be able to test certain strategies. Yes, they may have worked very well for similar issuers in the past, and yes, that might work really well for you, but markets change. The regulations, on Facebook, you mentioned things are always shifting and changing. So you have to have a budget to try some things out. As you could probably speak better than I can on this, the first time you present an opportunity to someone, there's a low percentage, even if they like the opportunity, there's a lower percentage of them that are actually going to follow through and click on your page and click invest now and make it through to signing a sub doc and putting a credit card in. The second, the third time, the fourth time that you retarget these individuals, generally the percentage of those people that express some level of interest or activity viewing your site are going to be more inclined to consider investing, right? So you need a budget to launch certain strategies, to understand what's converting, and then to retarget those investors who have expressed interest. So the budget needs to, it's not like, we tell Reg A issuers who are looking to raise, 10, 20, 30, 40, $50 million. It's not like you show up with $50,000 and things just get going. You want to have a few $100,000 from my perspective in an offering, unless you have a extraordinary base of fans, followers, subscribers, and you simply want to just leverage that, which is a great strategy. But for those who don't, be prepared for a journey. That's why having a very important team is very important. You don't want to worry about problems. You don't want to worry about technology problems. We've all seen them. We've all experienced them in different ways. You don't want to worry about issues with counsel. You don't want to worry about the regulatory side. You want to, at the end of the day, the bulk of your budget is going to be going towards marketing your own offering. And if you don't have an offering minimum, one of the benefits of Reg A if you don't have a minimum is that you could close on funds soon after they're invested, right? And you could use those funds pursuant to the use of funds section in the 1A, which includes as a line item marketing. So a percentage of the funds that you raise really from the initial funds can be redeployed into marketing. So you don't need the full advertising budget at the starting line. And that's an important component. You want to create somewhat of a snowball effect where you're redeploying some of those funds into marketing, which is one of the use of funds, and hopefully generating some momentum. And momentum feeds, right? It feeds on itself.
There's a saying I've been using that momentum is investable. If a prospective investor gets there, whether they're part of your initial audience or brought there from a prospecting advertisement or a press release, I should say, a publisher win, or one of these investor emails, if they're visiting, they're coming back a second time, X amount of more dollars, X amount of millions more have been raised. There's an additional 1,000 investors involved. More publishers are covering it. It's being featured more places. It says something. That momentum is attractive. There could even be a fear of missing out if the time window is closing, but it's a different experience than if you get there and that's not occurring. There's no movement. So being able to have that momentum, again, love how we talked about the audience building, the rolling closes there and being able to reinvest funds that have come through and get to larger marketing budgets as a result. But at that point, it's working. The marketers that are managing on your behalf, whether it's in-house, an agency, consultant, whatever it may be, they're able to scale, and it's a more comfortable conversation for everyone because the analytics are showing what's producing. There's a difference between assumptions and analytics, and once it's showing up in the reports, a different story. What are some other recommendations you have towards scaling? Some of the campaigns you've worked on that maybe have hit the $50 million level, or just have really shown strong performance with investors. What are some of the commonalities you've seen and how they've scaled?
I think the issuers who have had extensive PR have done quite well, right? The message is being broadcasted, is being put out there consistently to the masses, which hopefully will generate a lot of traffic to the site. I think having the right marketing company puts you in a position to scale, because once you see the return on advertising spend on certain strategies, you want to continue to deploy that strategy, all the way throughout, right? I think that the publications and newsletters it's become very competitive, but there's new ones. So you want to make an effort to try to see who's out there and see if your opportunity resonates with them. You want to focus on, in some cases, institutional capital as well, right? So not every offering is kind of built, I think, for typical institutional investing or VC investing, but a number of them are, and a growing number are, and that might be a consideration kind of going into it. So I think that with distribution, syndication, multiple platforms, perhaps some elements of investment banking, which could also go into a Reg A as well. There's no reason why it can't if it's structured accordingly. Mixed with publications and marketing and investor acquisition, these are 6 or 7 different strategies to deploy, and you want to use all of them. You really want to use all of them. You have a year to raise your max offering amount, right? And you want to work with a team that brings a lot to the table and has a lot of experience with all of those different components.
Exactly. Why not leverage that experience? Why not tap into existing investor bases? I agree, 100% with what you're saying here. And again, your success record, your portfolio shows it. Etan, just to wrap up here, are there any final notes? And what's the best way for a listener to get in contact with you?
Pretty easy to get in touch with me on, if you go to Dalmore FG, or just Google Dalmore, dalmorefg.com. You'll see me on the site. You could email me. Believe it or not, I like to have the first call with our issuers. I enjoy it very much. I wish I could spend more time with each of them. I would say that I know I keep going back to this, but I say it for a reason. Make sure that you're working with experienced counsel. Make sure this is structured properly. We certainly are happy to introduce you to folks that we've worked with. Make sure that marketing companies tend to market themselves pretty well, right? So there's a lot of people out there that like to say a whole lot of things. I think one of the benefits of working with experienced counsel and a broker dealer that's seen, how some of the marketing companies have acted and performed with other issuers could be pretty helpful as a sounding board as an issuer is considering making a very important decision. Having the right technology and the right automated investor follow-up technology is very important, right? 25-35% plus of investors that click on your Invest Now button that you spent so much money getting them to are going to bail. They're going to bounce. Why? Because their kid yelled and they got distracted, or they had second thoughts. The credit card number didn't work. They didn't understand how to sign the subdoc. You got to follow up with these people, right? That's gold, right? You want to follow up. Here's a link to where you left off. Let me know if you have any questions, and you want to stay in touch with them. But most importantly, it's not a you build it and they come type thing. There's real work that goes into it. There's a risk that goes into it that it might not work, right? And so we are obsessed with learning what has been working and not working, and sharing that knowledge and experience with our clients. That's most important to us, right? It's where we look at ourselves as partners with the issuer. We're aligned with the upside in that way, and we really want to see all of our issuers succeed. And we're going to keep getting smarter, and the industry is going to keep evolving. And all of these service providers are going to get smarter and more experienced. Be compliant. I would strongly recommend working with a broker dealer, and the right counsel is critical.
And I think we share the mindset of we want to see more success industry-wide. The rising tides will lift all ships, and there's going to be more groups getting involved here. And we want to be making the right recommendations for these founders. Like you mentioned, this is what worked, this is what didn't. That experience is priceless. I definitely encourage all listeners to get in touch with the Dalmore Group. Again, wealth of information and learnings and findings here. Tom, thanks again for joining. This has been a pleasure on my part. My team's going to be taking notes. We're going to be sending you more Reg A Plus founders and issuers as they come across our desk because of the level of expertise and recommendations you're able to provide them. So thanks again for hopping on today and being able to walk through this with our audience.
Likewise, brother. It's always great to spend time with you, and thanks for the opportunity to be on Test Optimize Scale. I think the world of you and your team. You're great people. You have a lot of experience, and it's always a blessing and a pleasure to work with you.
Thank you so much. I appreciate that. And for everyone listening, thank you for joining in, and we'll see you next time. Take care.